Hello, fellow traders. 'Tis I, TheRumpledOne. I guess I'm going to have to do this. We'll call this part two. um, I went over time. I lost track of time. I just kept talking. So we were talking about the pivot and the pivot fade. We were loading up some of the different pivots here. How to make money. Because when you see a missed pivot, how to make money is you want to trade in that direction. So for example, and you want to trade in that direction when it makes sense to trade in that direction. So you see here on the daily, we've already bounced 30 pips off the bottom. Okay, but really is what you want to do is you want to look tomorrow, which would be 2 o'clock my time, when the New York session ends. You want to look to go towards today's pivot. You want to fade it. You also want to realize that this missed pivot may come into play either tomorrow or the next day also. Let's see if there's an example here. So for example, here on the dollar yen, 2 days ago we had a missed pivot. Okay? Then the following day, price came and covered that missed pivot. Now, you should be able to trade this way very profitably, because when I ran the frequency distribution, it was in the 80s. This has something like an 80% chance of winning. Now, once again, it doesn't always have to cover and hit the pivot for you to make money. So once again, if today at the open, if you would have gone toward today's pivot, you would have gone long and you could have picked up about 20 pips. Okay, because if you look at this, you can see the open was at 0.74 and the high was at 0.95. So that's 21 pips, which over here, once again, this indicator shows that. But just in case you don't have this indicator, I want you to understand how this works. Because I read something the other day about teachers. And one of the things is that sometimes somebody could be really good at something, but that doesn't mean they're a good teacher. And they said the better you get at something, the further away it is from the beginning. So you forget what it's like to be a beginner, because questions that you don't even think to ask, beginners don't even know to ask, because you already know certain things, so you don't even think to ask those questions. But beginners don't know those, so they might ask questions like, well, how do you calculate that? You just can't take it for granted. So I'm going to make sure in these videos that, number one, not only do I teach you how to set up and use the indicator, but how to make money using the indicator, and also try to explain each little piece so those who are just starting out don't get left behind and don't wind up scratching their head. You might have to watch it 2 or 3 times to get it, but I'll try to explain it. And if after that you don't, then feel free to contact me and ask a question. You can post the question right there in YouTube land in the comment section. And I do read the comments. And if you have a question, a technical question, I do try to answer. So, that's the pivot point. We want to fade the pivot. In other words, if it opens below, you want to go long. If it opens above, you want to go short. And so you can see here, some of these, the pound hit its pivot, okay, but we've got an open pivot from a couple of days ago right there. So you can see the pound's trying to get there. And once again, you can also look at the weekly pivots. You can see it missed the weekly pivot here, missed one here. There was a missed pivot right here, but it got covered yesterday. You see? got covered. And what we mean by covered is price hit it, touched it, or exceeded it. Okay, so it got back to this level and kept going. That pivot got covered, and that's why the indicator doesn't draw a line. But as you can see here, this pivot has not been covered or hit, so that's why it shows. And so right here, this one under the missed pivots heading shows you 1 bar ago, or 1 week ago in this case, we missed that pivot. So that pivot needs to be covered. The question is, do you think this one's going to get covered or that one? And you can see here it lists out all the pivots that were missed. And the pivot plot will list all the ones that haven't been covered. Only the ones that haven't been covered. So that's pretty much it on the pivots. And I covered the min-max range, and thanks again for that suggestion. And so if you've got any more suggestions for the dashboard, let me know. I don't do them all. There's a couple people want it, and it's just like, I'm really not into all these squiggly lines. So if it's something that's just too out there, no. And I don't code EAs. People want EAs, but I just refuse to code them. There's too many things that can go wrong in my opinion, and something that needs a magic number I just can't take too seriously, even though there's lots of guys out there using robots. So trading is something personal. I just have my personal preferences. Back in the TradeStation days, when I coded the Auto Avery and the Auto Avery Portfolio Manager, I had confidence in the easy language code. I don't have that same confidence with the MT4 code. I just don't. That's just how I see it. So I think I've covered all those things today. Now, one other thing, talking about trading philosophy, I keep stressing, pick one method and stick with it. And I was talking to a trader who said he was successful, and I said, don't listen to me, don't listen to anybody, just keep doing what you're doing. If you're successful, don't change a thing. Just keep milking that cow till it runs dry. Because once again, that shiny object syndrome, the SOS, or the FOMO, fear of missing out. Oh, there's something new and shiny, I don't want to miss that. No, see, here in trading, what we're thinking about is just making the pips, making the money, increasing the size of our accounts, producing an income. And it doesn't matter that somebody else has something new out there. Just ignore it. Sometimes I catch myself looking at things, thinking about things. I go, no, I just need to come back to do what I know to do and not worry about all the other things. But that being said, yes, I do look at other things and I come up with new methods. But if you found something that works for you, just stick with it. The psychology, behind trading, we do so many things that fool us, mess us up. In fact, I just got finished reading the book, The Undoing Project. I'll have to do a video on that one. But it was an interesting read. And actually it goes over the relationship between Kahneman and Tversky. Those guys that they won I guess Kahneman won the Nobel Prize for their work because Tversky was dead, and if you're dead you don't get a Nobel Prize. That's just the way it works. But in psychology and economics, showing how people the market says you're going to make rational decisions, but they show how people don't make rational decisions, how you can look at things in a certain way and fool yourself. The way a problem is worded, if you word it to the positive, chances are you're going to pick one way, and if it's worded to the negative, you're going to pick the other way, and in both cases, you're probably going to pick wrong. So you just have to be careful. That's why I tell people, study logic and study psychology, learn about, study all the logical fallacies, just learn those so you don't get fooled by things that aren't real, or you can see through. Somebody's on a forum somewhere on a video talking about this, that, or the other thing, and you can point out the errors. And that's one of the reasons why I like to use statistics. I like to use the 5 M's. You have the minimum, the maximum, you have the mean or average, you have the mode or most, and then you have, let's see, min, max, mode, mean, and, what's the 5th one? I guess Alzheimer's must be kicking in. I can't remember the 5th one off the top of my head. Min, the max, the mean, and the mode. I'll have to get back to you on that one. Because, see, the mode is the most, the mean is the average, the min is the minimum, the max is the maximum. And for some strange reason, I just can't think of the 5th one. It'll come to me. Maybe this video, maybe another one. But anyway, by using the statistics, I look at the mode rather than the mean, because the mode tells me the most time something's going to happen. So, for example, with the frequency distributions, if the mode says it hits 50 to 60 the most, but the average is 70, I'm going to know 50 to 60 is going to be my target, and I'm going to bail. Now, if it happens to go beyond that, that's okay. But, over the long haul, I'm going to have more winners, because if I, sit there and I'm up 50, but I'm going for 70, then all of a sudden I'm only up 40, only up 30. I can watch a winning trade, a good winning trade, become a small winning trade, or actually go to a losing trade, all because of the psychology and the greed that happens. So you have to, just keep yourself in check. And also the tools, you don't need to have a whole bunch of different tools. So that's why in these batches I send out the different templates for the dashboard. There's 86 different functions, and there's not enough screen space to do 86. You don't need to have 4 or 5 screens to have all of these. Now you just pick the ones that you find useful. Right here really is pretty much more than enough. It tells you which ones were hit, which ones are still open. So, for example, if you go back to the daily at the start of the day, you can pull this up, and these will all be open, and you can see, if how many open pivots there are, and you can just start trading from there. And the yen is very well behaved. You can see, even though it missed it, it gets covered, missed it, covered, missed it, covered, missed it, covered. So missed it. I would think this one might get covered sometime soon. And you can see here how far back you have to go before you have some pivots that weren't covered. So I've got about a minute left, so I'm not going to overrun this one. So, fellow traders, I hope I explained how to use the 2 new columns, the min-max on the range and the missed pivot. Okay, and this is just showing you the missed pivot again here. These are the ones that have not been hit, not been covered, and these are all the ones that were missed that day. And as always, fellow traders, it's not what you trade, it's how you trade it. TheRumpledOne signing off to go back to draining the banks.